Hey everyone, hope they're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update for commodities. We're going to work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you need help with anything, check out finding-value.com. That's where I dive deeper into all of these topics and sectors, looking for potential investment opportunities and sharing them with everybody in the community. Tomorrow, we're going to be going over, tomorrow we have a Saturday question and answer session at 7 a.m. Mountain Time. And we're going to go over how I choose some of these companies and give you some examples of my process and approach to the companies. So if that sounds interesting, definitely sign up. We have a special coupon code, specials, the coupon code. You get 50% off the first month only on the monthly membership, and a larger discount on the yearly membership. Let's dive in, take a look, see what's going on today. We're starting with the DXY. This still looks good. We've got this reversal candlestick, which is this guy here. We don't see a ton of selling pressure follow through, which makes me think that this is a flag pattern where the dollar could go up in the short term. As that dollar goes up, we're going to be watching this resistance line that we are underneath. That resistance line is this white line going across where we've got some trading occurring here through all these years, using it as support and resistance on both sides of this thing. So since we're underneath it, it's going to be a little bit of resistance as we get up through this section there and try to break through it if it gets to that level. The 2-year yield's dropping a little bit, 0.82%. So that's dropping. We're underneath resistance. This very well could start to head lower in the short term. And I know that governments, we'll say government, Scott Bessent, Powell, all of them, I know that they want lower yields. So that is definitely what they're trying to do. And the market is being very volatile in both directions. You can see the upward moves here, and then we've kind of cooled off here. So we don't have reversal candlesticks where we're going to blow to the downside. I mean, it's possible, but we don't have, to me, it looks like we're putting in some sort of consolidation. We're underneath resistance. So we need to see follow through to the upside if we're going to move to the upside. That will also move the dollar higher, which the dollar looks good to move potentially higher. So we're in the crosswinds here. We'll see what those guys can do, if they can bring this down or not. If this moves higher, 2, 10, and 30, it's going to put pressure on the markets when it reaches critical levels and above. And that critical level is the 4.5% range. Notice that we hit the 4.5% range and we cooled off that top. So we had a very strong drive here. And if it were me guessing, they stepped in here. That would be my guess. They're trying to bring this yield down. That's going to be a tailwind behind the S&P 500 and the NASDAQ. They're going to try to prop it up. I don't know if that will be successful. Generally, when you get these strong selling pressure moves off the tops, that it may or may not reverse that momentum or trend. So that's what we're looking at, and that's kind of what I think is going on. We're right on support here for the 10-year yield. There's that support line. If I were to look at this and just look at the technical analysis, this is just a pullback ready to go higher, with the reversal candlestick being that big bullish engulfing. But I know that there's forces out there that want this lower. I understand that. We've got the 30-year yield doing the same thing, down 1.11% today. We've got a little bit of congestion going on here, and it's being held underneath that 5% area. We are above support on the longer term levels. There's the support level that I'm talking about there. And this still looks bullish from a weekly candlestick, bullish engulfing here and small selling pressure, which is a flag pattern or some pennant formation, whatever formation it decides to form. TLT bond prices are heading higher. We are up 0.74%, but this looks like crap over here. But I know the Cent's come out and said that they are going to defend the 4.5% area. And I've heard some people come out in terms of the Federal Reserve, some of those guys that run those things saying that they are willing to do. I don't know if they specifically said, but I'm guessing that they're hinting at QE or stimulus or something to defend some of these levels. So they want to push this higher. They want to push yields lower. That's their goal, I think. 2 year yields or 2 and 10 year yield curve. This still looks like it wants to go higher. And the tariff announcement back here brought us down and created a lot of volatility in this ratio between the 2 year yield and the 10 year yield. When this drops like a rock, if it were to drop like a rock, that's when you get the problems in the market. The fear kicks up and all that stuff. But I'm listening to Besant, and he says that he thinks the volatility is peaked out at 60. It's going to come on back. I don't know if he's stating that that is what he's trying to control or if it's just his opinion. I'm not exactly sure. But you start to add these things up. Him coming out saying that we're going to peak at 68 and the vol's most likely peaked. And then he also comes out and says that the 4.5% is going to be defended. That kind of reverts to quantitative easing and manipulation of the currency markets. So this could look a little bit different if the free markets were completely handling this versus maybe what these guys are doing behind the scenes. And I don't know if they've got the power to control this or not. A lot of money is going to be printed if they're trying to control all this. TYX TNX ratio slightly higher today. And that's generally a little bit of a tailwind behind gold, that specific metric. But we've got some headwinds, like the dollar was up 0.3%. So that's a headwind for gold. So gold is down $31. It looks like it's trying to consolidate here. And we have this big wick at the top that generally indicates a potential reversal. And now the question is, well, what does this consolidation look like if we get it? Is it going to be long? Is it pull back a lot? I don't really care about that in the short term kind of metrics here. I think in the long term, this is definitely a big bull market move. So a lot of people get their heads wrapped around the short term, and I don't try to do that. Longer term, bigger picture view, gold's going way higher. But we very well could get some sort of pullback, and maybe we even get down here around the 2950-ish level, which is a possibility. But this does look like a little bit like almost like a flag pattern, inverted flag pattern that we could head a little bit lower in the short term. Silver down 1.6%. We haven't broken through this short-term resistance line, and we very well could track sideways or head lower. This still looks good to try to work our way through if it wants to try. We've got a nice big bullish candlestick here and smaller selling pressure. So it's aligned well. We are underneath strong resistance at about 35. That's what we want to break. And we'll see what happens here. If we get a pullback, no big deal. Longer term, it looks fantastic longer term. So the big long-term picture, everything looks great. Medium term looks good. The shorter term, it's fighting some selling pressure. Platinum down 5.5, still squeezing in this nice little tight area here. This thing's ready to explode at any time. Maybe they're going to release, they're doing QE or stimulus. Who knows what they're going to release? It seems like this market is very headline driven. And then palladium down at support, down 1.7, and squeezing into this corner I put here between support and resistance. XAU to gold ratio, we were down a little bit, down 0.5%, had a little bit of momentum coming back up throughout the day, and nothing's changed here. Gold and silver mining companies are still dirt cheap. We've broken the downtrend. Everything looks A-okay for that to try to work higher. We've got GDX down 1.9%. So this pullback in gold is also impacting some of the mining companies. We've got good support around 46-ish bucks. GDXJ down a little bit, and again, good support around 57.75, 57 flat. And then SILJ down 1.44. We've got strong resistance in this area. I'll just put a kind of a line through there. Strong resistance trying to get through there. We'll eventually get through it. Just give it time. Crude oil up 0.65%. Kind of an interesting setup here. We've been chopping sideways here. We've got low inventories across the world. China's eaten through their inventories. America's eaten through their inventories. And we've got a potentially a rising wedge that could break lower. Um, I can draw it a couple ways here. You can draw it like this if you like and say that we're still in it. You could also hit the closing prices of some of these and say that we are doing a retest that we could potentially roll over. Both of those could be valid. We could also break on out, which I think is the lower. It depends on yields, what they do with yields, the dollar, all of those things. And if we get weakness in the market and if there's going to be a recession, then yes, we would fall to the downside and yields would pull back. And I think that's definitely what they're trying to do. I think tariffs is a part of that, of what they're trying to do. TTF gas down. That's a bearish formation. I just drew that in real quick yesterday, and that followed through to the downside. I'll just put one kind of, we'll put two here. That's an inverted flag pattern. That's broken to the downside. So down 4.7% there for Dutch TTF gas. Nat gas in America up 1%. The momentum is still to the downside. We got to see some more buying pressure for me to change my mind. But that's still heading lower. We are in seasonality wise. We're kind of not in a great seasonality wise for natural gas to go up. So it pulls on back during this time of year. Our boy XOP, yeah, you know me, putting in a bullish engulfing. Kind of weird because that's a bullish formation to go higher. So we've got oil that's sitting underneath a little bit of resistance. Kind of looks a little bit more bearish. This is putting in a bullish formation where we could potentially go higher. Let's wait and see over the next few trading sessions what actually pans out. We're at resistance here too. If we can break through here, things are going to look a lot better. OIH heading sideways in this awesome pattern that I drew here. We can draw it a little bit more legit. We can draw it through here and draw it through here. This big bullish engulfing is right there at the beginning. That's what's driving it higher. We do have a bearish engulfing here, and we're in that pattern. We entered it from the top side down, which could be a bearish continuation pattern that heads lower. Very well could be the case in a market sell-off. Newcastle coal futures up 4.3% today. That looks pretty good, and we're right at support. We'll see if that support holds. There's the support, and we're right on top of it. We're starting to chop sideways at that support level. We've got Sprott Physical Uranium Trust up 1.44. This looks beautiful for a potential bottom here and moving higher. What we have next is this upper trend line that we want to shake and bake over and get moving. But right now, things look good for the Physical Uranium Trust and moving higher. So that's good. We're also seeing uranium futures pricing moving higher. And those two, I'm sure, are definitely correlated. And the Sprott Physical Uranium Trust could easily drive this higher as well because there is an impact in buying pressure on the spot market from the Sprott fund. So that's looking good. It's looking like it's turning and heading higher. The equities are selling off a little bit. I think the S&P was down today. I didn't even look at the S&P. The S&P was up a little bit. So URA was down a little bit today. Still looks good to go higher. We had monster days yesterday. Could just be a little bloody nose, and everything still looks good to go higher for URA. URNM, same thing. Little bloody nose. And URNJ, same thing. Still look good to continue on up. We've got nickel up 0.5%. That's kind of tracking the overall markets to some degree, but we've got lots of support through here, and that's where we're located. We've got copper down a teeny bit, and we are next to these large selling pressure candlesticks, and that was that forced induced tariff information. And I don't know what's going to happen with tariffs, guys. And tariffs it's a big change because the way that you tax things does have a drag on the economy, but we've got mixed information here. This here is bearish because we're taking more time to get up, and that could potentially roll over. But I don't see rollover candlesticks showing up. This is all bullish here. That's a flag pattern and buying pressure of that wick today, which shows me that we could potentially head higher in the short term. So it's bullish very short term, bearish from this drop and the way that we are coming on up could easily still roll over. And we haven't seen the candlesticks for that rollover if it decides to roll over yet. COPX down 0.86 still looks good to move on higher. Lithium up a little bit. That still looks fantastic for a move on up. We also have a little bit of resistance that we'd like to get through here that we're sitting right on top of. If we can break through that, I think things are going to look pretty good. I think this will eventually end up being a potential double bottom. Your lead-in pattern here, your bottom is there and there. This is a false breakdown that gets people short and is going to squeeze them to the upside. So a lot of people think this market's going to fall, but they could get easily squeezed to death on a vicious slingshot to the upside. And if Besant's back there playing with yields, maybe they're playing with stock market too. Who knows? REMX down 0.9%, and that looks fantastic to move higher. I do agree with the arrow I drew yesterday. Just a small little bloody nose today, which is a continuation pattern to the upside. Good, good, and good. Iron ore down slightly, and we are still squeezing. This is the squeeze of a pretty long time here. Squeezing, 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 and I think this is going to rip. Whenever it decides to go, it will rip. I can't tell you when. Aluminum down slightly. We had a bearish formation here. We're still stuck in that thing. Getting a little bit more bearish candlestick today. Baltic Dry Index up 4%. It's trying to turn and move on up. That looks good. To potentially move higher, we've got the big buying pressure, the smaller selling pressure, and then the falling wedge, or whatever you want to call it, and then the bullish engulfing that's occurring today with the week. Emerging markets down slightly, but still looks good to try to work its way on up. We've got an above support. Mu down slightly, but that's still a bullish formation. It's not bearish, at least not yet. We do have resistance that we are going to have to get through. All of this is resistance of where we're located. We've got the longer term trend line that's on top of us that we still need to get through. But this is all a bullish formation here. You get a squeeze, and then we've kind of dilly-dallied around here with some news, some tariff news, whatever the heck news. Yields were going all over the place, uncertainty. But that still looks good to go higher. KRE down 0.92% today. Still looks okay. It's working and tracking. There's no reversal candlesticks. And then XHB, that also has broken a downtrend, looks good to go higher. The home builders, here, I just want to show you guys something. You guys maybe don't know this, but here's XHB. Let's throw crude oil up on top of this. Crude oil and XHB are interconnected. Home builders generally lead, and then crude oil may follow. And then crude oil is we'll call it very volatile. But this is moving higher here, and that looks good to continue on its way on up, which means that may run counter to all the recession bros. Coming down to tan, tan's up 3%. That's looking good. That's breaking out of some resistance there. That looks like it's got putting in an A effort to move on up. Russell 2000 still looks good. No reversal candlesticks. Broken out of that kind of downtrend there. We'll see what's going on here. Or a little consolidation, whatever you want to call it. S&P 500 is back at resistance. We'll see if we can break higher. Watch yields. If yields go down or are held underneath the 4.5%, this may be okay to move on up. And I know it's going to be a lot of momentum that came on down, but we're putting in some pretty big candlesticks on the weeklies here. We'll see if he can reverse this. I'm saying Besant and Powell. This is a lot of momentum generated from the markets peaking and then the tariff information too. But it's got some work cut out for it, and it's got some good setup to try to work its way on up. The NASDAQ's doing something very similar. We're breaking through some resistance, and we'll see what happens. SMCI moving on up a little bit, and again, that's breaking through some resistance or trying to. We've got NVIDIA up 4.3%, breaking through its downtrend line. We could see a move higher here. Very possible. In Besant, if you go and you look at some of the things that he said, 4.5% is what he's come out with. BTC, 1.7 up. That's broken through resistance, heading higher. Liquidity might be coming. Insiders are positioning. We've got Ethereum up too, 1.7. That's a bullish formation to head higher. Higher, higher, higher. The recession guys are going to be late to this move because they're not looking at the patterns. They're looking at old data, perhaps. So maybe the worst is priced in, maybe not. Maybe insiders know that Trump's going to do something with tariffs. I don't know. A lot of stuff going on right now. MSTR moving on up 5.24%. That doesn't smell like a recession. And then we've got the VIX down 6%. Bissett made the comment here, or it was after that. Sorry, it was like one of these days in here. He said that it probably peaked and is heading lower. And I don't know if that's because he's back there playing genie in the bottle, making everybody's wishes come true. I don't know. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Use that special coupon code. We've got a question and answer session tomorrow. It's a Zoom call. So you can log in. You can get sign in to the website. You can click in the upper left link, Zoom, and then Zoom meeting. You go in, and then you can click the Zoom link. You can join right in. And you can listen. I also tape those. I put them up to the website afterwards. So if you can't make it, no big deal. I will be going over how I approach these markets. You can see how I do it. It doesn't mean that it's the best approach ever, but I look at a variety of things, the technicals, ratios, some fundamentals, all that stuff. And I'll show you what I look at specifically so you can see what the fundamentals are of, say, something like coal, or you can see the fundamentals of the company, or you can see things that I look at and what I think are important for buying some of these companies. And I'll share that with everybody. So that's what we're going to go through in the beginning of tomorrow's Q&A session. And obviously, some people have sent in some questions as well, so we can answer those as well. So if that sounds interesting to you guys, we've got a big commodity bull market that we are in. We've had a pullback. It's called Wave 2, an Elliott wave. And right now, I think we're getting close, hopefully, sometime in 2025 here, hopefully in the summer or something, close to a potential bottom where all this stuff bottoms out, starts to move on up. And maybe it's 2026, maybe at the latest or so. But we are in a slowdown. Things have definitely been hit. I think the tariff information could easily have an impact because people have delayed orders, delayed hiring, have hiring freezes. There's a lot of stuff on the uncertainty side that could put a bottom into this market some point here in the future. But that's what I've got for today, guys. We'll catch you next time. This is Finding Value.